Welcome back to Income Trading 101. Today is Saturday, February 20th, 2021. Wanted to make another video, this time on Oracle, the stock. I just saw a great article, I think it was on Barron's, about Oracle and their move or their angling towards cloud computing and how this might actually be quite a shift for Oracle, the company, as they move into a new phase of growth, if possible. So let's take a look at good old Oracle. You guys know Oracle. It's been out there for a long time. We're only going to be able to pull data in this service through 2011, but I like going all the way. There you go. Oh, it gave me a little more. Let's see if I can get any more. That's it. 2009 it looks like. But you can see we've been approaching highs in this. We are around. I'm sorry, not approaching. We're sitting around highs, all-time highs in this, and it's really interesting because we know right off the bat that like moving averages. If you were to do a monthly data, this is daily, but if you were to do a monthly data thing that used moving averages, it would just be an up. I mean, this stock has been strong. There have been some pullbacks, absolutely. There have been some times where within a year it looks sort of either down or channel sideways, but it's hard to ignore this upward move in the stock. So let's go ahead and pull this on back. I just want to look really at the last year of Oracle. Let me pull that all the way. Make sure I'm all the way to the end. Okay. I'm going to tighten it up a little bit. There we go. Basically February to February. So and get rid of the volume. We can see these earnings. It typically let's see, that was lower than expected, lower than expected, lower than expected, and lower than expected. So it seems to have consistently disappointed on earnings over the last year. But this thing still pays a dividend, so not bad, 24 cents a quarter. I mean, that adds up quite a bit, quite nicely actually. So if I'm doing the math right, that is 96 cents. So you've got a $61 stock. So let's do that. 96 divided by 61. It's not a whole lot, but it's better than a sharp stick in the eye, as we used to always say. So 1.5%. We certainly have seen some other dividend paying stocks that are significantly higher than that, but still it's nice to get paid to own a stock. And you can always do things like sell, covered calls, or just outright trading other options for some additional yield enhancement. Right off the bat, before we even do the moving averages, I'm seeing, this stagnation from mid-April to early June. I mean, just flat there. You see other shorter periods of being flat. So this stock absolutely can trade in a channel, sideways channel. I get chopped up in sideways channels. I wait for breakouts or upwards or down before getting involved. But once again, when you look at the full amount of data on this stock, it's hard not to be bullish. So let's go ahead and start off with a moving average as our indicator. We'll get 3 of them, as we always do. So I'm going to switch these up. I want a short term in green, because that'll be my buy signal for the moving average. I want the midterm in red, and that's going to be a little longer. But certainly when red is on top, I should be looking at selling. And then I'm going to switch out for a longer term, like a 60-day. And I don't mind keeping that yellow, just as long as it isn't red or green. So here we have it. Right now we've got a period of congestion. Pull that in closer. Little period of congestion. All 3 moving averages are in line. You've got the 10 higher than the 20, higher than the 60-day. However, this this slope is starting to head down on the 10-day as price is below. And so I think this might be either a short-term sell or just pause and wait for another buy signal. Again, hard to ignore the data on this stock and how strong it's been. And I'm actually going to pull this on back out to April. I've been ignoring that pandemic drop and recovery, just sort of analyzing companies from there. Let's play with time a little bit just to get a better look. I never want to miss something that's obvious on one time frame because I was focused on another. So the 4-hour has already switched to the actually the 4-hour shows the 10-day is already below, or the 10 period's already below the 20 period. So that's definitely congestion because they're all out of line. If you remember correctly, I use moving averages to identify trends, and so I need all three lines to be in order. So in an up move, I want to see the 10-day or the 10 period higher than the 20, higher than the 60. And when it's anything otherwise, I either can ignore that situation and say it's not time to trade. The key for me oftentimes is simply being patient. A little bit of patience goes a long way. Let's look at the 1 hour. So the 1 hour, in the 1 hour, we actually have already gone. Not only are we negative, but it's been negative for several days. With the green, the 10-day trading below the 20 and below the 60 period. And there was some congestion here as well, but now it seems to be pulling lower. So if you're ever in doubt, it never hurts to wait another day. If you miss the trade because you waited a day, so be it. But I'd rather miss a couple of trades for being late than lose my account because I was early. I jumped the gun on some trades and couldn't afford the volatility. So this is down to the 30-minute, and at this level, we've got all three are in line. The 60 period on top, the 20 in the middle, and the 10 below. And with the 20 above the 10, the red line above the green, I definitely would be looking to sell this. But I'm not completely there yet. So let's go ahead, and then the 15 minutes even more bearish looking. Let's move back to the 1 day, and we're going to flip over in the analysis and focus on or take a look at a little bit of MACD, the moving average divergence indicator, which gives us a good idea of momentum, as well as the cool thing with this is you've got down here this blue line is the MACD line, which is basically the difference between right now a 12-day and a 26-day exponential moving average. And then you've got this red line, which is the 9-day average of that difference. So the red line is actually sort of a slope of the difference. And that's why this is a convergence divergence, because when the MACD is above zero, this is diverging. That means there's a positive difference between the 12 and the 26. And when it's below the zero line, that's when there's been a convergence, meaning they're a lot tighter in their valuation. So we'll start off with the 10. 10 is crossing a little bit above the zero line. That's not a full sell signal to me. This one back here was more valid back in January the 4th of this year. So let's see what it looks like at the 1 hour level. So at the 1 hour, we've been in oversold territory for a while, and it almost looked like we were about to head higher, but just a couple days ago, or just a couple periods ago, a couple days ago, yesterday, we had another crossover below to head lower, below the oversold or below the zero line, which means it looks like this market is going to continue selling at the 1 hour level. And the biggest difference in which one of these you use depends on how long you intend to hold these trades. And is it a trade or an investment? This crossover here for the sell never got back into the overbought category or territory, so I'm less interested. Like this one back here would have been very interesting. Even this one here, back on the 10th of February, but right now, this to me is just a little chopped up. And that's always a function of, as well, just having a trending market, even if it's the counter trend. Because I would say down right now is a counter trend, and this is a look at the 15-minute, and you never really get into overbought scenario, right? So not sure that the MACD this time added any real value. We're going to kick it back out to the daily and just see, is there anything that would be worthwhile to have us retrace. I do want to look at, let's see, I'm going to go ahead and look at this at one of these. Nope, don't want pitchforks. I want the retracement level. All right, let's expand this out so you guys can see it a little better. All right, so we did see the 50% sort of had a couple of times where that seemed to bounce off the 50%. Also, nice little bounce off the 38.2%. And yeah, right now we're sitting between the 50 and the 38.2. So if anything, I would say you want to probably sit still, watch the data, see what's about to happen in this stock before using any of the three indicators that I just said. I mean, sure, you might be able to make a little bit of money on a short-term short of the stock, but just make sure that you understand your actual time horizon, right? Because what you don't want is to get in there, short the stock, and then you get another leg higher in the stock, and suddenly you're selling puts, you're having to do things to try to exit that position, or you're just telling yourself that you believed in it long term anyway, and that Oracle was oversold. I'm telling you, I hear this sort of logic almost daily. So if you do decide to trade this thing, definitely keep an eye on it. You want to make sure you make money ultimately. And I'm just not a fan of what do you call it? Sorry, I've really screwed up this graph. There we go. Got to make it pretty again. I'm just not a fan of turning a short-term trade somehow into a long-term buy and hold. So I want to be honest in my positions, honest in my thesis, and honest in my trading, even if it's just being honest to myself. So you can see this has gone higher, except for this pullback, and even then we ran up to new highs. So even with it being down low a little bit, you have to ask yourself, what is the larger trend? Is the larger trend the down move or the upward move? And if you can agree that the upward move is the trend, then I would really hesitate on putting on a position that doesn't support the upward trend, because the trend is going to be stronger. I'm sure you've heard those silly little, like, the trend is your friend. There's a reason people say stuff like that. And look at this, even in this short-term look from back in November all the way to current, I still just see an upward trend. You have higher highs and higher highs and higher lows. That is by definition an upward trend. So if you were to decide to go ahead and sell this, you definitely are going counter trend. So be very cautious. All right, that's it for today's videos. Thanks so much for listening and watching. And if you haven't already, definitely subscribe to this channel, because we're going to be putting out videos just about every day. So look forward to having you be part of the family. All right, take care. Happy trading.